Hello everyone, welcome back to Fundrise Finance. In today's video, I want to go over how much my portfolio generated as options income in the month of June. So like I shared in my previous videos, I started my options journey the last few days of March early this year. So till now, I have completed 3 months in my options journey, and this is my options tracker, which keeps me honest. So for discussion purposes, I'll hide all the transactions from this tracker till end of May. So my options portfolio is close to $13,000 currently at the start of the month of June with the ticker symbol Riot, on which I made a small profit of just over $3. Then continued it with Groupon, then Bank of America, that gave me upwards of $10. So in case of Bank of America, I held my shares through the ex-dividend date of June 1st, for which I got paid 22 cents per share on June 30th. And Corning, we generated just over $9. Likewise, in the case of Corning, the ex-dividend date was May 30th, for which I got paid 28 cents per share. That was paid out on June 29th. So that's what why doing your options carefully on dividend stocks, you not only get to have the dividends paid out from the company, but also generate extra income using the covered call or the cash secured puts. And then I started to see my trades with Ford going against me. As you can see in this chart, starting end of May or early June, the Ford stock really started to take off. I had a $13 strike that held pretty good till early June. But after that, once Ford stock started going higher and higher, I just had to manage it. So that's why you can see here I had to roll multiple times. So every time you roll your call, you take an instant hit. Like in this case, you can see a negative $77. Or basically what we're doing is a $7 opening transaction for which we are paying $83 as a closing transaction. But we make it up by rolling it to next week, which is what I did here. Paid 83 bucks here, but I received 89, and then I paid 147 for it, and then received 158. So you keep rolling your transaction to a certain date as long as you're in the credit, and that should hold you in good way. Then one of my favorite stocks in recent months has been Manchester United. If this is the soccer club from England, which just like Ford, it has done pretty good in the last month, going upwards of 34%. So I don't want to hold the stock for long, so I kept on raising cash secured puts on this and never got assigned. And I got healthy, juicy premiums to boast of. You can see I received 47 bucks here, then 62 bucks here in the mid of June, then again almost 40 bucks here, then again 100 bucks over here. That's for two contracts, then again 25 bucks. So yeah, Manchester United has been pretty good to raise cash ticket puts on. But one of the bummer stocks that I have options is on Bolero, which has done nothing but go in the downwards move. So currently I'm just holding on to this, raising covered calls with some little premiums. As you can see, I got 14 bucks here, and again another 20 bucks over here. So I'll continue to create covered calls on this till I get my cost basis adjusted. And once I am good there, I'll just sell off this stock. One of the other bummer stocks that I hold is Microvision, which I started towards, I would say, second week of June. But since then, unfortunately, the stock has just been on a downward spiral. As you can see, down almost 47% in the last month. So even like this, like just like Bolero, I'm just rolling the stock again and again to generate small credits. So I'm hoping Microvision will catch up with every other chip stock. Again, this is not a costly stock to hold. 500 bucks in, as my strike price. As you can see here. Then I was able to get rid of my Hecla mining stock after I made sure my cost basis was accounted for. Then we can see transactions on Beyond Meat, SoFi, Carnival Cruise Lines, Rivian. Each of these giving me a profitable transaction of close to 10 to 20 bucks each. I also had to roll my Bank of America call. So yeah, do want to hold my Bank of America a long time, so I don't want to get it called away. So I am rolling it as long as I'm generating credits. Towards by end of June, I had open transactions on SoFi, Manchester United, Bank of America, Microvision, US Bank Corp. Now, US Bank Corp had its expiration date on 6/29. So I'd purchased 100 shares of the stock outright rather than creating a cash equipment and waiting for it to get assigned and stuff. So I just bought it outright and started creating covered calls on it right away. One thing I forgot to mention earlier also is I always look for a 75% profit target. So the moment I create a opening transaction and it gets fulfilled, I set a limit order at 75% profit target. As and when it hits that particular price mark, the closing transaction gets triggered. So I do not worry about the market moves and stuff. Some people go for 90%, but I'm pretty much comfortable at 75% profit target. So the suggested sell column that you see here, this is based off the 75% profit target. So yeah, as and when I feed my data into this tracker, it generates the suggested sell, and that's what I create my closing transaction limit order on. So these are the entire list of options transactions for the month of June. We are close to 80 transactions over here. Of all these, the one that hurts me the most is when my calling stock got called away. But yeah, can't really complain. That's how options work. Sometimes they work with you, sometimes they work against you. So finally looking at the numbers for the month of June, the final amount generated was $705.77 on a portfolio that was just under $13,000. That gave me a return of 5.45%. To be frank, I didn't really expect this to happen because June was a month where volatility was at its low. As you can see here, starting June 1st, the VIX index, that's the volatility marker for S&P 500, just kept going down, and we in fact hit the lowest for the year towards the end of June. So with such low volatility, I never expected to generate such good incomes. I did mention about this thing in my last video also, that maybe the May premium of $546 was a good one. I may not supersede that, but here we are. I beat it by $170 with just $500 higher as my portfolio value. I'll take that any day. 5.45% for just 1 month. Amazing return, I would say, but still, I have to keep myself grounded. I should not be expecting this to happen month over month again and again. Markets have a way to humble you. I always look for that 30 delta or somewhere between 20 and 30 delta. I always go for a weekly calls as much as possible. So that if you have to roll your transaction, you have multiple options over there. That's how I got stuck with my Bolero, which on a monthly calendar. So yeah, lessons learned. We learn, we adapt, or we should not repeat those mistakes again. That's what an intelligent investor always should be doing. So yeah, we don't know what July would bring us. The markets are on an upswing. The volatility is not that higher, so the premiums are expected to be somewhat lower. Now, I know I've said the same thing in my last video, but here we see for the month of June, we are at the best highs so far in this short journey. Let's see what July brings us, and yeah, I'll keep you all posted on how this journey is going. But yeah, options again, many people have misconceptions about it. It's like gambling and stuff. No, if you do diligently, you follow the basics, I would say majority of the times you would come out on the green. Yeah, that's all I have in this video for you all. Until we meet in the next one, like I always say, let's try to do as much as possible to be financially healthy and keep taking those small strides towards financial freedom. See ya. Bye.